Good afternoon, everyone. It's Andrew O'Donnell with Supercharged Stocks. Pleased to have Chris Berlet with us today. And this is going to be an interesting conversation because I'm really trying to focus on a lot of generalist and commodity-based discussion. And we're lucky to have Chris because not only is Chris a graduate of the London School of Economics in London, England, he also has a degree from Queen's, and that's as a mining engineer, as well as has a CFA. So this is quite an extremely rare mix of specialties and specialty focus to bring to the market. Maybe you could talk a little bit about what led you to go down that kind of specific path.
Okay, Andrew, thank you. So when I graduated in 1990 from Queen's University, my first job was with Schlumberger in the Middle East and in the wireline engineering services. And I started work on July 1st. I reported to work and graduated May, reported to work July 1st. August 1st, Saddam Hussein invaded Kuwait. So the Middle East for about 6 months, and there was a kind of a stalemate while H.W. Bush and Saddam Hussein, they built up troops. And at that point in September, I had left from there, went to London, got into the London School of Economics, discussed with them the possibility of going to school there for a year. So they accepted me into a graduate program, which I completed in 1991. And the invasion happened in August. The Gulf War itself lasted about 3 days. But by the next year, after I spent that year studying, I was more interested in the aspects of finance that I learned about at school there, and I ended up joining a French bank, Bank Paribas, for the early part of the 1990s. That was before it became BNP Paribas. They were acquired ultimately by BNP, and Paribas at that time it had started as Banque de Paris et Pays-Bas, and they ran their capital markets group out of London. So we started with equity derivatives and then traded government bonds. And on government bonds, we were doing Germany and France and the sterling desk. But my principal focus during the 90s, from 92 to 1995, was trading German government bonds there.
That's pretty exciting because we go back into, and we won't cover this, but back into the whole currency crisis with Soros back with the pound back in the 90s. Wasn't that around then somewhere?
Yes, it was.
It was, okay. But let's talk about it more. We won't go into that because that'll take us down a whole different rabbit hole. But tell me a little bit about the government bonds, the trading government bonds. What kind of would you learn from that?
So the government bond market is the first thing. Today I'm much more involved in gold and silver, and the government bond market is three orders of magnitude bigger. Today it's $145 trillion market worldwide with debt. So in summary, as you know, with mineralfunds.com, we track gold ETFs. We've got 44 ETFs around the world. That's $145 billion in gold ETFs. There's $145 trillion in debt instruments worldwide. So the gold ETF holdings represent 0.1% of the total amount of asset debt. And silver is even more strange. We track mineralfunds.com. We track 14 silver ETFs, and more than 50% of the world's GDP is in currencies controlled by 6 central banks, which are the Federal Reserve, the BOE, Bank of England, ECB, European Central Bank, BOJ, Bank of Japan, PBOC, People's Bank of China, and the Swiss National Bank. So the currencies represented by those 6 central banks comprise more than 50% of world GDP. In the gold market, it's really quite different. You've got shareholders that own those ETFs, the $145 billion in gold ETFs. You've got 114 gold and silver managed funds that are owned by unit holders and shareholders. And then you've got gold and silver companies, all of which are owned by disparate shareholders, some of whom are identified, some of whom unidentified. And in terms of gold production annually, actually more gold is produced by artisanal miners than either Barrick or Newmont. So 30% of the gold produced annually comes from artisanal mining. So there's a very disparate control structure between gold and silver market, principally owned by shareholders, and gold and silver funds, and the central banks that control fiat currency, ultimately results in trading of bonds.
Yes, and now you've mentioned mineralfunds.com a few times, and that's a site of your own that you've compiled an enormous amount of data on, and you've touched on a little bit, data specifically for ETF market. When did that first start, Mineral Fund site?
We started that a few years ago, but basically we track 114, all of the world's managed gold and precious metal managed funds. So we've got 114 managed funds in there, representing, in summary, assets. They've got $25 billion in assets.
Yeah.
And we break them down by domicile. The biggest jurisdiction, $10 billion in the United States with 20 funds. Behind that is Luxembourg with $9 billion in assets and 22 funds. And that in Luxembourg, domiciled in Luxembourg, is the world's biggest gold fund, which is the BlackRock Global Fund, World Gold Fund, $5.7 billion in assets. And that's run by E.V. Hambro and Thomas Hall. E.V. Hambro is the son of Peter Hambro Mining. After Luxembourg with $9 billion, you've got the UK with 7 funds, $2.7 billion. Canada has 15 gold and precious metal funds with $1.7 billion. And France has 9 with $600 million. And then the last 2.8, so roughly 10% of the total assets of $25 billion, is in all the offshore jurisdictions. So Switzerland, Austria, Liechtenstein, Cayman Islands, Australia, even Malaysia has managed gold funds, a pretty big one, $300 million, that one. Sweden, Finland, Zenito Gold Fund. So in total, you've got 114 funds, $25 billion. And it's interesting about that group, there's really, this disparity between silver and gold is even more pronounced in the managed fund sector. There's only 4 specialist silver funds in the world. The largest and the leading one is Stabilitas Silber und Weißmetalle, which is run by Martin Siegel in Germany, North Rhine-Westphalia. And then behind that is the 9 Point Silver Equities, which is Maria Smirnova and Jason Mayer in Toronto. And then behind that, there are 2 smaller ones that are domiciled in Liechtenstein, which are the Silver Plus Fund, run by Christian Beter-Wolf and then the Safeport Silver Mining Fund, which is run by a fellow named Dr. Jörg Schatz. So those 4 silver funds have a total, those are specialist silver funds in the managed fund sector, have a total of only $250 million in assets, which is basically 1% of the $25 billion that is in all gold and precious metal specialist funds. So, silver's underrepresented in ETFs. There's only $9 billion in silver ETFs, and yet $145 billion in gold ETFs. But the specialist managed silver funds are even underrepresented as a proportion of gold and silver managed funds.
That's interesting too, because I like to throw in things for retail investors. Is someone like Warren Buffett, who's not a huge fan of gold in any way, shape, or form, is a massive fan of silver. Not only because he sees it as being a value, a store of value, but also because it's practical applications in regards to solar panels and use and whatnot. There's a lot more industrial use for silver compared to industrial use. There is industrial use for gold, but not at the same level. So what has that kind of shown you, that kind of disparity on those markets, and where does that leave someone who wants to get involved in silver and not necessarily even as an ETF, but other plays for silver, and why it's necessary for us to be looking for silver?
The market's not efficient at the small end. It's it's underrepresented from an investment perspective. The gold and silver market itself is tiny compared to the global bond markets, and then silver certainly in the managed fund sector is tiny in that there are only 4 specialist silver managed funds. So silver companies are often mispriced. And you've got some of the best bargains in the silver space. It's there's commercial applications for industrial applications, and then also as consideration as a precious metal. The gold-silver ratio has only been above 100 twice in the last 100 years, in 1939 and subsequently in the period around 1991. So today we sit at 100, above 100 in the gold silver ratio, and you get mispricing in the junior silver market space. When we first met, I was pitching you on our silver deal.
Yeah.
And so that silver company, Canuc Resources, located in Sonora State, Mexico, $5 million market cap. Yeah. We have 3 kilometers of very high grade veins that we confirmed, and you know we've been quiet for about 18 months. But you know we have estimates. We're pre-resource drilling there. Yeah. So, but Sonora State's seen some fantastic value creation for silver projects. You know, probably the best name on the street, the best managed company, and the best performer in the junior sector. Up the road, Silvercrest and Silver Viper also fantastic value. So it's a good jurisdiction for mining. Yeah. It's a good jurisdiction for silver, and as in the case of Las Chipas, the San Javier project for Canuc has a meaningfully high quantity of gold associated with the silver. It's silver vein of a porphyry, and about 30% of the metal value is gold. So the numbers are pretty high, very high grades. Very good value. We're at a $5 million market cap here, and I estimate that when we were able to drill a resource pretty systematically along the 3 kilometers of trend, we've compiled 17 claims in the package. You know that we could see one of those significant revisions in valuation that you can see in the silver space, because there is mispricing. It's not efficient at the junior level. So, you know, you see that the silver market is underrepresented. It's underrepresented in ETFs. It's underrepresented in managed funds. And then some companies are well below the radar, and there are some fantastic value opportunities. So, you know, I was pitching you on Canuc. It's one of our deals, and it is an undervalued silver play by I'd like to say by an order of magnitude, but there's certainly scope for revaluation.
Oh, absolutely. I mean, that's one of the things that is attractive to it. Is that it is. I look for asymmetric gains. This is certainly undervalued at any stage. I think you're at 6 cents, but you've got 70 million shares out. You know, it's Mexico. A lot more people are paying a lot more attention to Mexico. Even just lately, I think, was it Mag Silver? Was it last week raised 60 million? Now Mag Silver is a different, you know, it's a producer. It's a different scenario, but still, that's a silver company in Mexico. It shows that even in times of crisis with this pandemic, they're able to raise a significant amount of money.
And there's lots of scope for performance in the silver space, certainly with some of these undervalued, mispriced names.
What should we be looking for with you right now? Because, like you said, I mean, you can get into your stock for, I mean, for someone who wants to ease into mining, I mean, you can get into your stock for a very, very low price, especially considering the quality of management, the quality of the project. What should we be looking for? I mean, we've got COVID, so it's hard to say what we can do in 2 weeks, a month. But what are some of the kind of milestones that someone should be paying attention to?
You know, right now we're on lockdown. We've got cash. We're able to finance. We'll continue financing. But the reality is that's trading at a $5 million valuation. Yeah. We think there's, you know, we're pre-resource. We have yet to drill a resource, but we've patiently accumulated claims since 2010 because we can see the structure quite clearly. There's veins, there's a stacked vein system. They go along 3 kilometers of trend. They dip at 60 degrees. We have all the down dip covered, and there's you know, some of the we drilled 3,000 meters to confirm our understanding of geology. So there's in some cases 4 veins subparallel to one another with bonanza up to bonanza, high grades to bonanza, pinching and swelling, but with widths ranging from 0.3 meters up to 5 meters. And variable gold grades, averaging 2 grams. So averaging 2 grams gold and 400 grams silver. So you know it's very high grade system and structure, and we'll be able to drill systematically along 3 kilometer trend and down dip to establish a maiden resource. And so it's really just about execution. So a $6 million, $7 million market cap where we're doing our funding. You know, from there I see potential for what, with a 30 million ounce, largely inferred potentially to begin with, and then perhaps moving somewhat into indicated and measured categories. But you should be able to systematically develop meaningful multiples of the valuation today. you know, as we drill. And the drill program will be well calculated. It is well calculated. We know where to drill. We know the spacings to drill off so that we can calculate a resource. They mined 50,000 tons from the deposit in the 90s. They got paid for all metals. There's nothing, there's no deleterious elements in there. There's a paved road to within 100 meters of the beginning of the 3 kilometer trend. There's 3-phase power that comes to within 100 meters of the project in the small town of San Javier, and there's groundwater. There's an unused mill, 500 ton a day mill. So there's infrastructure. It's in a place. It's in a state where they permit projects. There'll be a lot of value. You know, as a discount to contained metal value, I can tell you this: that with those kinds of grades, when we're able to prove, the workings extend all the way along for the full 3 kilometers. The trick here was amalgamating claims. There were 17 different owners, but the old workings, and we've sampled it and press released it, they are still consistently 600, 700 grams in workings, fully 2.5, 3 kilometers along the trend from where the first 50,000 tons was taken back in the 1990s. So, and it's consistent with the geological model. These veins come off of a deep-seated porphyry, probably to the northeast, and so, you know, it's consistent with that model that there would be continuity throughout the 3 kilometer trend, and we see that. So we'll be able to drill the resource to begin with, probably 200, 250 meter spacings, and then down dip, and there are a number of advantages to this particular project that will be manifest as it moves, you know, towards potentially being a producer of higher quantities than they produced in the past, when we're able to establish a meaningful resource, i.e. the power, the water, the paved roads, and the jurisdiction. Sonora is a place where they permit mines. So that it'll be in our estimation pretty easy to build this up the value chain. You know, you're not going to be able to get it much cheaper than a $5 million market cap, and when we start drilling, I expect multiples of that because I think our base case there is 30 million ounces. 30 million ounces of silver and a very high gold credit to it all.
I think you touched on something really important there, and maybe people may have missed it, is that when you say collecting those claims, that is not an easy or quick process. When you find a project you like, people think, oh, well, it sounds really good. How come, why does it take so long? Like what's going on? That process, people, I don't think, have a full appreciation of how difficult it can be to amass the size and scope of a project that you want.
Yeah, 17 different owners.
Yeah.
Some of them small, you know, rectangular claims straddling the vein on surface. But really, what's important about that, Andrew, is that, you know, the system could go to 500, 800 meters of depth. It's been untested, so we will certainly be testing that. But all the down dip is covered by the claim package that we put together. So we have 3 kilometers along strike and 1.5 kilometers covering the down dip extensions, and it dips at 60 degrees. And in our drill program, when we started, we just drilled 3 things to really understand. We hit hidden veins that were not showing on surface, veins that did not have historical mining in behind, that were sub-parallel, and some of them were 1 meter wide with, again, 2,000 gram hits of silver. So it's a very high-grade system. Yeah. With a meaningful gold credit, and ultimately, as you prove out your resource, that'll drive economics. It'll be profitable.
It's definitely one to kind of put on the side of the computer to say, listen, if this will have a lot of news flow, a lot of things happening, and you know, when you have anything, you're going to see this thing move because it's got a good structure, 5 million market cap. I mean, to add some value is going to be. I mean, it's going to go fast. If you guys start hitting anything that you feel strong about, it's going to go well.
Well, for comparison, and I of course I don't disagree. This is one of our deals, a nice one, silver. When we drilled in 2017, the stock hit 60 cents a share, and I think there were about 50 million shares out there. That was a 30 million market cap, and we provided some fantastic results. Subsequent to that, we've been quiet. We've been waiting through a market downturn. Silver came from $18, $19 down to, I think it hit 11.80. Yeah. And different market today, but so we've been quiet. We haven't really talked about it. We've got more than $4 million into the project with that past drilling plus the accumulation of claims. So we're trading at that kind of valuation today, and it really is a base case. And the idea of accumulating along that trend was to put something together that's big enough to be, to even at 500 tons a day or possibly more, to constitute a 12-year mine life, 10, 12-year mine life, or maybe a bit more. And there'll be lots of material around there that can be purchased. It's been known, the grades in this area, the gold credit's been known for quite some time. The trick was accumulating claims and doing it mostly in a private company, because public company, people begin to know and the price begins to change. So we were able to successfully accumulate a long trend quietly for a number of years, and that really comes to fruition now with a drill program where we're going to establish a maiden resource. And we should be starting that out in 6 to 8 weeks when this COVID lockdown ends. And we're in a different market today than we have been.
There you have it. I really appreciate the time. Canuc Resources. I like these types of ones where it's, a jurisdiction I like, a commodity I like, a solid team and management that has a lot of expertise. And once again, you see some of these old charts and you think, oh, what happened back then was at 60 cents and why is it now at 5? And we get to hear as to why. It's up for someone else to decide, but you go, ooh, this sounds kind of attractive. So I'll leave it with other people for now, but I really appreciate you taking the time, Chris.
Okay, Andrew, thank you. Stay well and stay safe.
Absolutely. Thanks so much.